All right, welcome everyone to today's presentation. This is Kurt Nadevelt, the CEO of Rainstar Capital Group. I'm excited to have our guest speaker on the line, Joel Wilsford. Joel is our managing director down in Atlanta, Georgia, and he does a great job with our clients, not only down in Georgia, but also nationwide. And so welcome today, Joel. How are you doing today?
I'm doing well, Kurt. How are you doing?
Doing great. So today we're going to be discussing our topic of the day, and the question is, did your bank decline your financing request? So, Joel, why don't you kind of jump in, typically kind of walk us through, why do clients simply get rejected by their local bank? Now, why don't you speak a little bit about, how, we're able to help them with some of our solutions on our platform, over 200 registered alternative lenders.
Okay. Well, the story is not unusual for our client to come to us and said, I went to my bank and I've been there 20 years and they turned me down for my loan for my new office building or my new plant or my new truck or whatever it is. And so it's not unusual for us to hear that from a client. And there's a number of reasons why the bank could very well be declining your request. But the typical three bases are based on the 3 C's, what we call the 3 C's: the cash flow of the business, the credit of the business and the owners, and the collateral of the business and owners. So one of those is somewhere out of whack, and therefore the bank doesn't feel it can support doing a loan with this client. So, cash flow is looking at your business and seeing what your cash flow is. We're very good at being able to match non-bank lenders that have an appetite for the kind of business you have. We're very good at being able to analyze your cash flow and making sure that not only do you have the required down payment for whatever the loan requires, but also the ability to sustain the debt. Very often the bank may have higher cash flow requirement coverages of the debt than what the non-bank lenders will require. It's one of the flexibilities that we bring to the table. The second element, the second C, is credit. Banks, if you have a ding on your credit and it's below 680, you're going to have a tough time getting a bank to approve you. Maybe your business is cyclical and you're in a revenue declining period, but in a couple of years, things will turn around. It's been doing this for 20 plus years. Time in business. I have a couple of clients that have come to me because the bank, they're good customers. The bank wants to do business with them, but they're only 6 months old. They're 7 months old. I've got a couple of businesses that are 18 months old, and the banks just simply won't do it. And then collateral. It just may be that their appetite. I've had a number of clients come to me and have said the bank has turned us down. And I said, well, for what reason? They said that their portfolio exposure to the kinds of business I'm in is too big, and they're not going to accept any more of my business as far as loans. So there's a number of reasons why banks will decline you. It's nothing to be ashamed. It's not about you personally. It's about what they can or cannot accept. But we do need to know why, because that lets us then take what your deal is, what your need is, and turn around and structure a solution with one of our 200 lenders on our platforms. We have a flexibility. If you have a deemed credit, 680 FICO score, it very well may be that we have a product that's a no credit check credit line or no credit term loan that we can provide for you that gets you that capital you need. If there's a story behind the revenue decline and we can show how this capital is going to turn it around and make it go up again, we have lenders that can accept that story and build that kind of package for you. Time in business. We have lenders who are willing to loan to individuals, into companies in business 6 months or longer. So we have that flexibility. And this is something that the bank just doesn't have. We have the ability to reach out, regardless of the collateral, the credit, the cash flow, reach out and structure a solution for you with an appropriate lender. And so, yes, your bank declined you, but that doesn't mean you cannot get the appropriate capital you need. That's what we do and specialize in. It's just what we do, Kurt.
Yeah, absolutely. And so I think the key thing to understand is that, while banks are still going to look at those 3 C's, our lenders will as well, but there's more flexibility, right? Of course, that doesn't mean we're going to fund 100% of every single deal that walks into our door. So what we focus on here at Rainstar Capital Group is, providing that education, taking a look at why, your bank rejected you, and then helping you and us to make a conscious decision on, if it'll be a fit for any of these alternative lenders. So anyway, Joel, thank you so much for your time today. You did a great job in addressing this question, and we'll talk to you soon.
Thank you, Kurt. Have a great day too.
Yep.